first rate that you're seeing on your screens, which is in the green, mild green actually, 17,900 on the Nifty.
We went to levels of 18,030, but in the last 20 minutes, you've seen some amount of profit booking coming through.
The Nifty, which is of course in the green yet, but has fallen from the top.
The index is, I think, up about, 90 points, 100 points. It's been positive, but it's been very volatile. So what did well is oil and gas, as an index was up about 1.25%. FMCG stood out with 1.25% gains. Real estate and I think the IT services index was up about 1% or so. All in all, I mean, a pretty good day.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I am Reema Tendulkar and these are the headlines for the day. A last hour surge helps Indian indices close near the day's high. Sensex gains over 500 points. The Nifty reclaims 18,000. Mid-caps and bank stocks underperform. Oil producers and refiners perk up in trade as the government trims windfall taxes again on crude oil, diesel and aviation turbine fuel. The levy on petrol stays at nil. No slowdown in weapons or wine. Hindustan Aeronautics tells CNBC-TV18 it is looking at a big swell of orders in the next 6 months. Sula Vineyard is upbeat on its big crop for this season. Zeemann signs a 26,000 crore rupee contract with Indian Railways to supply and service electric locomotives for freight movement. Railway service providers tell CNBC-TV18 that industry players will continue to see a slew of orders. Kesoram Industries slumps after losses widen in the third quarter. The management tells CNBC-TV18 the company is not on the block, even as it stresses that refinancing by Q1 FY24 is key. Meanwhile, Bank of India slides after third quarter saw write-offs rise, and an overweight rating from Morgan Stanley gives Tata Chemicals a fillip. And here's a lineup of what we have for you in store today. It's a power-packed show in market opinion. Rahul Arora, CEO of Nirmal Bang Institutional Equities. And in big corporate voices, we have CB Ananthakrishnan, CMD of Hindustan Aeronautics. Straight to the day's trading action then. A last hour surge helped Dalal Street end near the day's high. The Nifty and the Sensex gained about a percentage each, with heavyweights like Reliance, ICICI Bank, HDFC Twins seeing a sharp move higher in the last hour. Mid-caps relatively underperformed the benchmarks. Prashant is here with the details.
We've been complaining about the fact that the market on the Nifty at least has been stuck in a range for a while. And today, perhaps there is a glimmer of hope. There was a break and break higher. The question is, will this last? But in any case, it was a good close for the index. And bulk of the gains came through in the last 45 odd minutes of trade. Banks underperformed. I mean, the bank index was only up about 0.25% or so. Pockets of gains largely came through from the energy pack. Reliance is, of course, the one to thank. FMCG, real estate and IT services are other sectors which did well. PSU banks, which was the big winner yesterday in a down market, actually underperformed and was down sharply in an up market today. So a bit of flip-flop coming in there. Large cap stocks, as I said, Reliance, of course, closed at the day's high. There was L&T, which was looking strong. HUL, out of the blue, came out and participated, propping up the FMCG space. Banks, I mean, actually HDFC Bank and HDFC primarily in the large cap space. And the IT services names are starting to come up a little bit. Like yesterday, HCL Tech and TCS stood out amongst large cap IT services. Advanced decline flipped between being positive and negative, and by close I think it was largely even. But the losses coming through in names like Bank of India, the new age companies, Zomato, Nykaa, Paytm all lost. Financials was a pocket of losses apart from the PSU bank space. Manappuram, PNB Housing, South Indian Bank were some of the names which saw cuts. There were gainers as well in names like IIFL, NHPC, Minda Corp was looking very strong. Specialty, Loda Developers and something like a Spencer's, which was up almost about 15% or so. With today's sort of move higher, the Nifty is reclaimed the very near-term 20-day moving average, which is watched very closely. US markets will open after a day of holiday yesterday, and I think all of that will be important when we come back to start trade once again tomorrow morning. Back to you.
Prashant, thank you very much for that. In market opinion, Rahul Arora, CEO at Nirmal Bang Institutional Equities, says infra and cement stocks could benefit from the budget. Adds that new age companies are price attractive. Listen in.
I think from a portfolio standpoint, if you're playing it off the budget, I'd say infrastructure. right? I think you guys were highlighting Ashoka Buildcon. I think I could add a PNC Infra or KNR Construction, where the balance sheets are very good. The order book to build ratios are about 3.5. As a second order beneficiary, cement, which will probably be our biggest overweight sector this year. You could look to play through names like Ultratech in the large cap and down the market cap, something like a JK Cement. There's a marked shift in the kind of companies that are coming out with their IPOs. I think you've moved from loss-making to profit-making, and people have moved away from talking about price to sales to back to return on equity and capital employed and price to earnings. In that trade-off, when liquidity is withdrawing, I think these guys will find it a little difficult to make a push. But let me reiterate, I think if these guys are able to demonstrate a road to profitability and cash flows, it's not necessary that they have to report it in this year or the next year. But if the burn is coming down and the market visibly sees that, I think they'll be rewarded. I think the prices are very, very attractive right now in all of these new generation companies. They just have to go back to the basics on focusing on cash flows and talking about return ratios. And I think the market will probably, they want to give them the benefit of doubt. They just want to see a little bit of delivery before they do.
Okay. Moving on now to macro opinion, Ed Yardeni, president of Yardeni Research, believes that the economy will do well and is quite resilient. Listen in.
Minority of economists and strategists who don't think we're going to have a recession this year after all. The economy is going to do quite well. I think it's very resilient.
Let's also get you some expert opinion from Jonathan Garner, Morgan Stanley, who said that China could possibly drive 50% of the global growth and is big enough to change the global environment. Garner told CNBC that emerging markets are outperforming developed markets after a long time.
China's the world's second largest economy. It's just completely reset its own policy dials. In the environment that we're anticipating, it'll probably drive as much as 50% of all global growth, having driven probably only around 5% of global growth last year. That's big enough to actually generate a meaningful upside revenue surprise for Europe, which has a lot of revenue sensitivity. And again, that's one of the reasons the European market is outperforming the US. So China's quite big enough to change the whole global environment. There's at least another 10% plus upside to our current base case target for EM. And EM is outperforming DM in aggregate for the first time in a long time.
To the second headline now, the government has trimmed the windfall taxes again on crude oil, diesel and aviation turbine fuel. However, it has left the levy on petrol at nil. Timsi Jaipuria is here with more on the story.
Well, that's right. Government has yet again decided to cut the levies, which will be with effect from 17th of Jan under the windfall gains tax regime. And this time again, the trend of a decline has been seen in the last fortnightly movement of global crude oil prices, which has led to these cuts. The new levies are on crude, there has been a cut from 2,100 rupees per ton to 1,900 rupees per ton. On diesel, the levies have been reduced from 6.50 rupees per litre to 5 rupees per litre. On ATF, the reduction is from 4.5 rupees per litre to 3.5 rupees per litre. And on petrol, the levies will continue to remain nil for the next fortnight starting from 17th of Jan. It is understood that this revision will keep on continuing depending upon the movement on global crude oil prices, and noting that there's major volatility happening towards the downside. There could be further reduction in the next fortnight depending upon the movement. Back to you.
Timsi, thank you very much for that. The third headline for the day, Hindustan Aeronautics was in the spotlight as the government increasingly looks to domestic companies to fulfill requirements of the armed forces. We caught up with CB Ananthakrishnan, Chairman, Managing Director, and he says while the current order book for the company stands at 84,000 crore rupees, more inquiries are pouring in from other countries as well. Listen in.
As of now, the order book is standing at a healthy around 84,000 crores, and we expect another 6,000 crores from the STT-40, for which the order has already been concluded. Only the documentation part is pending. The inquiries have increased. The leads which are coming from the other countries have also increased. There are a lot of countries which are now showing interest on HAL product. As far as the Argentina is concerned, we are in discussions with them for the helicopters. We expect that orders should come through.
Another stock in news today was Sula Vineyard. It gained for the second straight day after reporting record quarterly sales. We were earlier joined by the MD and CEO Rajiv Samant, and he said the company plans to put cash back into the business and grow in Tier 2 cities. Listen in.
So I think already we've seen significant growth, as you've pointed up, 70% gross margin. At this point, I must say that it's not necessarily a priority, the top priority for the company to improve it further, because at 70% gross margin, we're throwing out cash. We're in a very comfortable position. We now want to plow that cash back into growing the business, into penetrating wine into tier 2 cities. Until now, wine has been very much a metro game, a few tier 1 cities. We want to take this magical liquid, what we call it, out to tier 2 India, and we want to spend money in penetrating that market for growth to come 2 or 3 years down the head. I think I'm very comfortable with a 70% gross margin at this point.
Moving on, SEBI has released a consultation paper on blocking funds for trading in the secondary market. This move is aimed at safeguarding investors' money from misuse and default by stockbrokers. Yash is here with the fine print on the paper. Yash?
Well, this ASBA-like model, or what do you call it, application supported by blocked amount-like model for secondary market, it's certainly a step closer to reality now. What SEBI said today is that for secondary market where transactions are concerned, the amount could be blocked in the client or the trading member's account itself, and it does not have to be transferred to the broker as far as that margin amount is concerned. Now, as far as under the proposed fund, the proposal is concerned, the funds remain in the client's account, but they will be blocked in favor of the clearing corporation and not the stockbroker. In case of any transaction being executed also, the settlement will happen directly from the client's bank account to the clearing corporation, removing the role of the broker in this entire transaction chain. We've been speaking to a lot of industry players, large brokers, on what this could mean for the industry. The feedback that seems to be coming at this point of time is quite positive. They say that the ASBA-like model in the secondary market will remove systemic vulnerabilities. What are these systemic vulnerabilities? Essentially, misuse of funds when they're kept with broker as far as margin amount is concerned. Also, it removes the risk of the client for the client if the broker goes bankrupt under any condition. Also, blocking funds in the secondary market could fasten the process to T+1 settlement, as the role of the stockbroker would go out and it would be a pain and payout between the client as well as the clearing corporation. Finally, blocking funds in client's account will also help the client earn interest on that money which is lying in his own account.
Thank you very much for that. Get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. Is still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. The fourth headline is Zeemann signed a 26,000 crore rupee contract with Indian Railways to supply and service electric locomotives for freight movement. This is one of the slew of orders that the railway service providers have seen in the last few months. Vivek is here on how the order wins have shaped up and how railway theme is playing as a whole.
Well, in the context of the very large win that we've seen Siemens getting, and this is for a 26,000 crore order win that Siemens has got for a locomotive project in India. The company is going to deliver almost 1,200 electric locomotives and also going to provide almost 35 years of full service maintenance. Now, in this particular context of such a large order win that Siemens has received, number one, we analyze, what this means for the company itself and what it means for the overall railway sector in terms of the opportunities and which are the key companies to keep track of. Now, when you're talking about Siemens, remember newspaper reports had earlier alluded to the fact that the company had emerged as the lowest bidder for this particular order win. Now, Macquarie report dated 6th of December 2022 had indicated that this particular order win is larger than the current order backlog of close to 17,200 crore that the company had at the end of FY22. So one single order win is actually larger than the overall order book of the company as of last year. Now, coming to the railway theme and how exactly are analysts looking at this particular opportunity size? The first one, of course, is the locomotive opportunity, similar to the case of Siemens and also the case of Vande Bharat trains. So the likely beneficiaries here, the likely participants in the bidding process, names like BML, Siemens, BHEL, and also Alstom, the unlisted entity, Titagar Wagons, as well as Medha Seva, some of the stocks to keep on the radar. The total opportunity for the Vande Bharat trains in the coming years is estimated at close to 1.6 lakh crore in multiple tranches. Now, coming to the other sector, the railway PSU stocks, a lot of these stocks have seen multiple order wins and also trading significantly higher than what they were around 6 months back. Now, what exactly do they provide? They mainly provide EPC services, they provide project management services, and also services like ticket booking, as in the case of IRCTC. So stocks like RVNL, IRCON, RailTel, RITES, and IRCTCs are seen as the key beneficiaries of this particular trend. Lastly, coming to the budget, the overall capex outlay for railways is something that analysts will keep an eye out for. Upgradation of stations, electrification, and doubling of rail lines is something that is anticipated. Nomura estimates almost a 29% year-on-year growth as far as this particular budget is concerned. 1.8 trillion rupees is the kind of capex outlay that Nomura envisages in this particular budget.
Very interesting, Vivek. Thank you very much for that. We also caught up with the managements of two such companies to find out what they've made of the recent order inflows. Listen in.
The railways are actually going in for a quantum jump. It's a completely new dimension. With the locomotive orders being there, the wagons orders have only to follow. Even figuratively, the wagons are following the locomotives, so the orders also should be followed. In terms of the overall opportunity, I would say it is going to be more than 2-3 lakh crores in terms of the rolling stock itself.
We already have Wi-Fi at 6,000 plus stations. Till now, we were not having any monetization. After finding this partner, 3i Infotech, we are very much hopeful that they will not only give us minimum guarantee of 14 CR, but will be doing much better.
The fifth headline for the day. Bank of India slid 5% on the back of a weak third quarter performance. Write-offs have risen to 2,500 crore on a quarter-on-quarter basis. That said, the PSU lender has delivered a healthy net interest income growth this quarter. Abhishek is here with the fine print.
Well, the numbers look good given the fact that slippages have declined quarter on quarter. The annualized slippage ratio is at just 1%, which is the lowest that you are seeing in last 8 quarters. Asset quality, the gross NPA ratio is 29 quarter low and net NPA ratio is 31 quarter low, which suggests that, PSU banks may report asset quality being the best in last 7-8 years. The restructured book, that's also declined sharply to about 2.65% of loans versus 3.08% in the previous quarter. Now, deposit momentum, that's a worrisome factor across PSUs. You may see deposit momentum being on the lower side than their private counterparts. Loan growth remained healthy at 18.5% YOY and about 3.5% sequentially. In that, the overseas loan growth was not good on a sequential basis because overseas book has declined on a quarter-on-quarter basis anywhere between 0.5 to 0.6%. But net interest margin, that's the key highlight of the banking results reported so far. It's at 31 quarter high at 3.28% versus 3.04% in the previous quarter, largely to do with the fact that, banks have been increasing the lending rates, which has worked in terms of net interest margin improvement. Domestic net interest margin has improved by 23 basis point quarter on quarter, and overseas margin as well, that's seen an improvement of 30 basis point for Bank of India. So in terms of PNL, the NII growth is robust at 64% plus on a YOY basis and more than 10% sequentially. The PAT growth was 12% YOY and around 20% sequentially. They have reported divergence for provisions, which has impacted the PAT growth not being in line with the NII growth. Back to you.
Thank you very much for that. Tata Chemicals has also gained following an overweight rating from Morgan Stanley. The brokerage expects market conditions to stabilize from the fourth quarter and Chinese demand to pick up with Beijing reopening. Sonal is here with the details.
Thanks a lot for that. Well, yes, Tata Chemicals is in focus. Morgan Stanley says that the stock has seen a 20% correction since October. So they are now looking at what next for the stock as well. They say that, yes, they expect market conditions to incrementally improve from fourth quarter, and company-specific triggers specifically are likely to pan out in the first half of calendar year 2023 itself. They are expecting stabilization in the soda ash market. But yes, there is a slow pickup in China demand, but it should see a reversal reversal in the downside pressure that we are seeing on regional prices as well. So yes, they expect prices to remain steady and fundamentally things to work out for Tata Chemicals as well. There is upside to production volumes. There are higher average selling prices that they are looking for. Going forward, US domestic volumes will be the key to watch for Tata Chemicals. Right now, the stock is trading at 6 times forward EV to EBITDA, which is near a 5-year average, implying an average soda ash average selling price of around $240 per ton. This is around 13 to 15% still below the mid-cycle. So there is an expectation that things will reverse, production volumes will improve, and that is something which will work for Tata Chemicals from here on. They have an overweight trading on the stock with a target price of 1,278 rupees per share, which is a substantial upside from current levels.
Thank you very much for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Presented by Test